Hello everyone and welcome to today's morning report on Thursday the 11th of August with me, Richard Perry, market analyst at Handset Markets. We've got a relatively sort of cautious open really. Markets have been sort of hit in the last sort of half day, sort of 18 hours or so by the oil price, which has fallen back lower, sharply lower actually, yesterday, on the back of the EIA oil inventories report, which showed a surprise increase in inventories. So subsequently the oil price fell quite significantly yesterday, and that hit equity markets into the close yesterday, and there's sort of a mildly cautious outlook going on now on these markets. We've have a little bit of a rebound on the dollar. Nothing too significant yet, but just unwinding some of those losses over the last couple of days, really, it's fairly choppy, to be honest. The dollar moves at the moment, and just for now, the euro is slightly lower, although it had quite a strong move up yesterday. But again, euro. I mean, I'll talk about this in my chart analysis, but I think euro is fairly choppy at the moment. Sterling continues to be an underperformer. Yen remains a strength in the forex majors. Interesting moves on the Kiwi overnight as well, following on from the RBNZ rate cut decision. They cut rates, but the Kiwi has strongly moved higher on the back of the fact that the market thought they were going to do more. So that is interesting. But generally speaking, we're sort of on the cautious side today. So we sort of looking like that, but there's not a great deal out in terms of economic data. The sort of calendar is fairly empty, really. If I just quickly sort of go through it, it's not a great deal through the European morning, and then you go through to the US. Again, there's nothing really until jobless claims at 1:30. 265 is the expected there. It's basically been very similar in terms of what we've had over past sort of few weeks, really, and the jobless claims don't really do a great deal at the moment for the markets. So my chart of the day is the Aussie. So let's just get the chart going. Here's the Aussie, and it's broken out. And again, the Aussie, again a strong move on the back of a rate cut. Yes, last week we had a rate cut from the RBA, and the Aussie broke out above the key 76.50 area. 76.50 to 76.75 was a key sort of resistance area through June, July. That got broken out last few days. Interesting that the move has come a couple of days of close. It sort of suggests that the bulls are in control. You've still got this uptrend that's been playing out for the last sort of 2.5 or so months, pulling the pair higher, and I think little corrections are going to be seen as a chance to buy. Now, what we have got at the moment is the RSI 64. In the move on June, it got to 67. A similar sort of move in April and also March. So you're sort of possibly got a little bit further upside potential, but again, you're sort of coming to the levels at which the RSI has tended to fall over in these bull runs higher. Stochastics also beginning to roll over, you can argue, a little bit, so maybe there is a prospect of a little bit of a near-term correction, but I think that would be a chance to buy. Now, here we see the hourly chart, and you've got a sharper uptrend. The daily uptrend comes in around about that sort of 75.50 area today, but the hourly uptrend, which is sharper over the last sort of couple of weeks, and you can see that reflected here on the hourly chart, whereby that currently comes in around the breakout level 76.75. So that is your level to sort of drop back to, and the hourly momentum indicators have already unwound, really. The RSI sort of bottoming out again around the sort of mid-40s. MACD line seemingly coming back towards neutral and bottoming out. The stochastics turning up, so maybe 76.75 looks to be the sort of area that the correction would come back to sort of push up higher again. Certainly on a near-term basis, but there is still the prospect of a correction that you could see coming back towards this main uptrend on the daily chart, but certainly on the hourly chart the uptrend comes in around that breakout level of 76.75. So it certainly looks as though little dips are being bought into on the Aussie, and it looks as though we could be coming back towards the 78.35 reaction high that we saw in April, because that breakout above 76.50 set to 76.75 I think is a key move. So I wish you good luck in your trading today on the Aussie, and I'll speak to you later. Thank you.